So in this video I want to go over IRS Form 8829, expenses for business use of your home. So when would this come up? I mean, this issue arises if you're a taxpayer and you're completing your 1040 and you're self-employed, right? So if you're self-employed and you work from home, you have your own home office, you are allowed to deduct an allocation of the total expenses for your home, for the most part, a percentage that is attributed to that home office. So first, let's talk about what kind of offices are eligible, right? Because the IRS is pretty particular about this. They want to be very clear that it has to be a room in your home that is dedicated to the business. So it's exclusively used for business use. It can't be a dual purpose room. So if you've got a spare bedroom in your home, and so you've got the bed, TV in there, and then you've also got a desk, right? And so you use it as a home office for part of the year, and then the other part of the year you're not using it because you've got guests over there and it's a guest bedroom. That wouldn't be appropriate in the eyes of the IRS, right? It's got to be just used for the business. And so this is certainly limiting because you have a lot of individuals work out of common areas of their home, right? If you're in your living room or your family room and you have a desk set up there, this unfortunately won't apply. You can't take an even smaller allocation, just for, let's say, the desk space. The IRS isn't going to allow that. So, assuming you have a room exclusively used for business, you might be able to take this home office deduction. So if we're starting with part one there, it's pretty straightforward. Total area of the home on line 2, just what's the total square footage, living area of the home. So pull that off your real estate closing statement or the listing from when you bought the property. It's a quick and easy way to get the number, and it's easily verifiable. If the IRS ever questions it, you could show them, okay, look, this is how we arrived at that number. And then line 1, the area used for business, right? So go into that room, get out the tape measure the room, and get a precise number there. And so the result is a percentage. So the home office percentage relative to the total area of the home, right? So it's pretty straightforward. So part 2, how do we figure the deduction? So on line 8, this is the tentative profit or loss from the business on your Schedule C before taking into account the home office deduction, right? So if we scroll back up here to John's Schedule C, he's got his income or revenue rather, a bunch of expenses here, and then on line 29, his tentative profit or loss, right? And so the reason why this is important is the IRS has limitations on how much home office expense you can deduct. You can't deduct expenses in excess of your profits, right? So if you've got so much home office expenses that push your business into a loss, it won't allow you to take the loss, right? It'll just zero it out. And so he might go, if he has a ton of expenses, he would go from 11,000 down to 0, but he can't go negative. So that's the starting point for this computation, is to make sure that we know, okay, well, what is his profit going into this? Okay, so now to get into the expenses. It's broken out into 2 columns, direct and indirect. Indirect is where you're going to be entering most of these numbers. So indirect expenses are the totals for the whole house, and then what we're going to do is take a percentage, so the 6% figure of these amounts. In effect, that's what's happening here. In the direct column, you would have expenses that are truly traceable and just apply to that home office, right? So, like, for example, down here for line 18, insurance, we're saying we have $200 in, let's say, homeowners insurance that covers the whole house and all the contents. But in the event that you purchase some additional insurance for just that room, if there was contents in just that room, then that would perhaps be more appropriately reported on the direct line, because that really does just cover the space in that room and those contents. But so if we go back to the top here, let's look at some of the indirect expenses, the most common ones you're going to see. So lines 10 and 11, mortgage interest and real estate taxes. Those are the big ones. So look at the 1098. You get from your bank about as far as what amount of mortgage interest you pay during the year. Look at your real estate tax bill, into those amounts, and then line 13, they're asking you, this is where you multiply, this amount, this total by the business percentage, right? So pretty straightforward. And then down here, we've got some additional expenses, lines 16 through 23. So insurance, utilities, add up all the utilities for the home, your gas, electric, cable, internet, everything can go in there. And then out of the total, and do the same thing. Take the total amount times the business percentage, and throw the total or the allocation down there. So you might be wondering, why do they split these up? So we've got the interest and the taxes up here and these other items down here. The reason they're splitting these up is mortgage interest and real estate taxes are also deductible as an itemized deduction, right? And so while these are not, these items down here are not. So they separate this on the form because any amounts that you don't use as a business deduction here, right? So the mortgage interest and the real estate taxes, the unused personal portion is then carried over and allocated to Schedule A as an itemized deduction, right? And so that's why if you have a home office, it's very important that you start with this schedule, because you don't want to double up on the expenses unintentionally. So what you would do is you would enter the totals here, you would deduct the amount of business portion that you can, and then the unused personal portions are carried forward, or back I should say, to Schedule A for itemized deductions, and you could see the personal portions here, right? So the personal portion of the property taxes, and then the personal portion of the home mortgage interest, right? Okay, so we'll go back here. Okay, so we got those totals, added the two up, and that's the new total for those expenses. And so now let's look at depreciation. So you are allowed to depreciate a portion of the home. Again, a portion of the home that's attributed to the home office. If the only asset you have in your business is the home office, the actual property itself, they permit you to use this schedule down here, Part 3, where you can kind of do a simple computation for the depreciation of your home. So you would enter the costs or fair market value of the property. It's the lesser of the two, right? So like if John bought this house for $250,000, but now it's appreciated to $400,000, and he started using it for the first year in his business in 2019, he can't depreciate $400,000 as the FMV. It's the lower of costs, or FMV, when you place the asset into business use. So he would use the $250,000 here. Then break out the portion that's attributed to the land, and then the basis in the building is the portion that's depreciable, right? You can't depreciate land. So the $75,000 is kind of set aside, and he can depreciate this $175,000 portion. And then the business basis of the building, this is the allocation attributed to the office, right? So we would take the 6.09% times the 175, and that's how we arrive at this 10,658 figure. Depreciation percentage, this is pulled from the form instructions. So depending upon when this asset was placed into use during the year, they have a chart where you look up what percentage you should be using, and then the amount of depreciation is simply the percentage times the business basis of the building, and then that's it. There you go. And then this amount is carried up here to line 30, and you've got your total amount of home office deduction. Now, in this example, he is eligible to use Part 3 because he doesn't have any other business assets. So like, for example, if he had to buy a piece of really expensive computer equipment, for $6,000 or $7,000, something, really, really high like that. And so we had that asset and the home office. He shouldn't be using this section, right? Part 3 is used only if you have that. So under that fact pattern, he should be using the 4562 form for all the business use depreciable assets. So if that's your fact pattern, part 3, leave that blank. Just put the home office allocation on that depreciation schedule and add all your other depreciable assets, and then you should be good to go. So 871 is the end number, and this number flows back to Schedule C. Right, line 30, expenses for business use or home. Subtract the difference there, and that's his profit after accounting for the home office expense. And so again, you would see the limitation step in here if, let's say his tentative profit was only like $500, the 871 would be limited to the 500. So it would in effect zero out his profit for the year, so he'd have 0, but he couldn't have a negative, right? So the excess home office expenses would be rolled forward, and he just makes sure to track all those roll forwards to future years so he doesn't lose those expenses, and that's it. So thank you again for watching, and please give the video a like and subscribe to the channel. Comment below if you have any questions, and I'd be happy to help. Okay, thank you.